Hello, everybody. Welcome to Wednesday. The S&P 500 was down almost 1.6% today. If you believe that the inflationary environment needs to get better, we need to have less inflation in order for the stock market to really take off, today was a good day. We saw the producer price index come out today. It's a measurement of wholesale inflation. It was very good. It had dropped quite a bit. Matter of fact, it hasn't dropped that much, since the bad times of the pandemic back in early 2020. We saw consumer sales come down again. Normally, that would be a bad thing, but when you're trying to fight inflation, consumers can be one of the main drivers, and the Federal Reserve has been trying to bring down consumer purchases with their rate increases. And we had some evidence of that today, which is not a bad thing. And 10,000 people were announced as a layoff for Microsoft. And again, that's a bad thing in normal times, but in a high inflationary environment with a tight labor market, softening up that labor market actually helps the fight against inflation. We had a cryptocurrency firm today talk about the possibility of filing for bankruptcy. We'll see what happens there. But again, cryptocurrency is one of those things that grew to a $3 trillion size. That's a lot of spending money that can come out and stimulate the economy. And now it's shrunk back down quite a bit. Again, normally that's kind of a bad thing in the overall scheme of things, but in terms of fighting inflation, that's a good thing. So in response to all of these, inflationary scenarios, we saw really good things reflected in the bond market, which is very good at predicting where inflation might go. So the 2-year Treasury yield drops again, the 10-year Treasury yield dropped. We saw the futures Fed funds rate market, which is a guessing mechanism for where the Fed funds rate will go, come down a little bit and showing some softness, in terms of decreases possibly in the Fed funds rate in the second half of the year. So the market was kind of struggling along with that, but then a couple of Fed Reserve governors came out and spoke, and they were very aggressive, talking about raising rates much higher than what was expected by the futures market, keeping them up all the way through the year, even though the futures market, is talking about, some softness and bringing down the Fed funds rate some at the end of the year. Now, the Federal Reserve has a vested interest in trying to bring the stock market down here because the more the stock market goes up, the more financial conditions ease. And so we got to be a little bit careful here with spending too much time thinking about, what the Federal Reserve, says. Let's look at what they do because, there is a vested interest in saying something and doing something else. So far, the bond market and the futures market for the Fed funds rate has been more accurate than the Fed themselves in predicting what they're going to do. And so here's what I would be focusing on and will be focusing on is really, again, I've said this before, but I think inflation is continuing to moderate here. And the real, thing to look at is recession. And so, we're going to have lower consumer spending in this environment because that's what helps inflation. But it can also, if it gets carried away, create, a steep recession, which would affect earnings, which could affect the stock market. So far, we haven't seen that. If you look at all the data, we've seen softness coming off of some pretty high runs from this pent-up demand and all this money that was pushed out. And having some of that come down is not a bad thing in this environment. Having it come down a lot will be, so we'll watch for that. But looking at what's going on right now, we can kind of ignore the Fed. What they're saying will probably blow over in a couple of days. We really want to focus on the earnings, which have been okay so far. And I think they've been reasonable. We got a long ways to go to see some of these earnings reports. I think we'll hear some bad ones, but we'll also hear some good ones. And so, it'll be really interesting to see what happens as we go through this earnings season. And I would keep my focus on, the things that are going to create a steep recession versus a shallow recession, and trying to determine, what that means. So far things are okay. We'll see, how that plays out going forward, but look forward to talking to you tomorrow. Thank you.